Attendees are in listen-only mode.
Good evening, everyone, and thanks a lot for taking out your precious time and joining this call. This is Abhishek Mehrotra. I head investment products with HDFC Securities, and we have a guest who doesn't need much of introduction, but I'll still like to do that honor because that's a pleasure always. So we have Mr. Nilesh Shah, who is Group President and Managing Director with Kotak Mahindra Asset Management Company. Mr. Nilesh Shah is being with Kotak AMC since almost a decade now. Mr. Nilesh Shah has been leading this best fund house and has worked with ICICI Prudential and Franklin Templeton in past. Apart from this role, Mr. Nilesh Shah is a part-time member of the Economic Advisory Council to the Prime Minister. He is member to the Board of Associate of Mutual Funds, which is MFI, and member of COBO SAC committee by SEBI. So Nilesh sir, it's always a pleasure to have you over the show, and all our customers who have joined directly or on YouTube are really eager to hear from you. What is there in market? This market, I think last 30 days has been fairly very volatile. People have seen their portfolios, especially if they are on mid and small cap side, little heavy, fluctuating the way they have never intended to. But that's how the markets are, in market at times teaches lots of lesson to the investors. So sir, over to you. All our customers are eager to hear from you. What is your outlook way forward?
Thank you, Abhishek, and thank you, HDFC Securities, for having me over here. First of all, my sincere apologies for not able to log in last time when we had scheduled this call. Sometimes technology defeats you. Before I go to market, let me start on a spiritual note. Next slide, please, Avinash. Is there a God? And do you believe God is an Indian? मुझे लगने लगा है कि God is there and he or she is an Indian. Why do I say so? If you look at Avinash, one thing at a time. If you look at elections, 6 months back we were worried with Karnataka results what will happen to the government. Today market is believing ab ki bar 400 par. The election uncertainty has gone out from the radar of the market. If you look at US Fed 6 months ago, they were raising interest rates. Now they are saying we will cut interest rates by 3 times in this year. If you look at oil, it's trading at $75, $80, despite Israel-Hamas war, Russia-Ukraine war, Red Sea disturbance, and oil production cut by Saudi. If you look at growth, against expectation of 6%, we are likely to get 8% growth this year. If you look at vote on account, everyone was worried about freebies and fiscal discipline. This vote on account gave fiscal deficit, which was better than estimated. Last year monsoon was bad, below average. This year monsoon is likely to be better. In some sense, there is a divine power blessing India, removing our challenges. I think there is also one more reason why God must be an Indian. If you remember Birbal ki kahani, when Akbar Raja told Birbal to make a line bigger, without touching it, Birbal drew a line below which was smaller, and the line above started looking bigger. The God also knows we are India. We can play 10 matches nicely and win, but in final we may not win. So God is trying to not only keep our line better, but also ensuring that others' line becomes smaller. For example, no one invests in Russia anymore because they are stuck in Ukraine. No one is investing in China as confidently because they have design on Taiwan. People invest in Taiwan with very, very fearful mind because China shadow is looming. You can't go to South Africa because there is risk to life. You can't go to Brazil because they have communist government. In some sense, our line is looking bigger because God has made others' line smaller. And finally, I do believe God is an Indian because suddenly there is a transformation in India. Panchtantra mein, you had read about the story of two cats and a monkey. Both the cat find a piece of bread. They went to monkey to get it shared equally, and monkey ate the whole bread. Normally, India was the Panchtantra's cat whose bread will be taken away by some monkey. For example, we were buying oil from Iran. It was on rupee credit. It was with 6 months credit period. The money was kept in UCO Bank in India. And that rupee balance was utilized to buy goods from India at a higher price. Now, we had a beautiful bread from Iran. One day, American monkey came and said, hey, we are putting sanction on Iran. We stopped importing oil from Iran. Who imported all those oil? China. They got cheaper oil. Their products became competitive and they dumped that in India. Even today, we run $100 billion trade deficit with China. This time, when American monkey said we are putting sanction on Russia, India didn't remain a billy. It became a bigger monkey. It said we will have to import oil from Russia. And thereafter, we had courage to go to America and say, we want to manufacture fighter jets. We don't have engine technology. Can you share that technology with us? This transition of India from Panchtantra's Billy to Panchtantra's monkey is most important. That could not have happened without God's intervention. So I believe in a spiritual way, India is blessed. There is a divine intervention which helps India all the way in its economy. Now coming to Indian economy, we can go to Indian economy part, Avinash. Coming to Indian economy, undoubtedly we have done well over last decade. Between 2004 to 14, our growth rate was moving parallelly with sub-Saharan Africa countries' GDP. Now we have started differentiating and moving faster than them. States are becoming as big as India of yesteryears. Today's Maharashtra is having same GDP which India had in 2005. Uttarakhand and UP's combined GDP is equivalent to 2001 India. Tamil Nadu, Gujarat, Karnataka has same GDP which whole of India had in 2000. In about 20 years, these 6 states became as big as yesterday's India. If all of us continue to work this hard over next 20 years, can we make in this 6 states 5 times today's India? ये हमने पहले करके दिखाया है, आगे भी करके दिखाएंगे. Imagine India becoming 5 times bigger in 20 years in this 6 states only. There are 23 other states which are also doing something. There is no doubt in my mind that we will see India multiplying several times in our lifetime. We have moved from being coach to the global growth train to becoming engine of global growth train. We were contributing 2-3% on an incremental global GDP. Now we are contributing 3 times that at 7.5%. And this is possible because we have built infrastructure at a rapid pace. Infrastructure which existed in 2013 is almost getting doubled in 2024. Coal production will jump from 600 million tons to 1 billion ton. Power capacity from 223 gigawatt to 435 gigawatt. Power generation from under 1 billion units to 1.6 billion units. Rail electrification from 21,000 kilometers to 59,000 kilometers. Highways from 82,000 kilometers to 1,65,000 kilometers. Airports from 70 to 149. Metro from 250 kilometers to 850 kilometers. And port capacity from 1400 mmtpa to 2800 mmtpa. This infrastructure buildup gives confidence that our growth rate is likely to sustain in the years to come. Are there challenges? Undoubtedly, yes. Our current power scenario is worrisome. Our power plants are running at all-time high utilization, and summer is yet to begin. This summer, will we face power shortages? I have my doubts. The consumption across many parts of India has remained subdued. Rural consumption is not growing as fast as urban consumption. Mass market products are not growing as fast as premium products. And bottom half of pyramid is not enjoying life as much as top half of the pyramid. Government and public sector and private sector to some extent is spending money on infrastructure and investment. That is a bright spot in our economy. Can we take growth for granted? Answer is no. We will have to continue pushing the pedal of reforms, which we started pushing in early 90s during Narasimha Rao government. We have to keep on accelerating on reforms. On geopolitics, remember, we need to be Panchtantra's monkey, not the billy whose roti will be eaten away by others. Our election should be fought on work done and not on the basis of freebies promised. Good economics should become good politics. And most importantly, our companies will have to master disruptive technologies. You know, when industrial revolution happened, India was 25% of global GDP. But we didn't usher in industrial revolution. That happened in UK and Europe. Over next 200 to 50 years, India lost out and was left with just about a percentage of global GDP. Now digital revolution is unleashed. Machine learning, artificial intelligence, cloud computing, all kind of digital disruptions are coming. We must ensure that we are able to master disruptive technologies and continue to maintain and grow in a disruptive world. We can skip this and go to next slide. If we now look at the markets in the broader context of our economy doing well, divine intervention, solving our problems, and ensuring that our peers do score self-scores. In that scenario, our market cap to GDP ratio is at all-time high, as Nifty or Sensex is also near all-time high. This ratio is well above its historical average. From a market cap point of view, small caps today trade at about 39% premium to historical average. Large and mid caps are around their historical average. While market cap to GDP and market indices are at all-time high, profit to GDP ratio also is at near all-time high at about 5%. India is one of the few countries where market cap to GDP ratio is at a reasonably high level. The street estimate this year Nifty 50 earning per share will be roughly about 1142 rupees. This will constitute about 19% earnings growth in last 5 years from FY20 to FY25. The market cap growth is roughly in line with the earnings growth. Next slide, please. Now the real question which comes, Nilesh bhai, what will happen? Will market go higher? Will market come down? Should I invest now? Should I invest later on? Should I book profit now? Should I stay invested? Now this dilemma is what all of us face. And in our college days, we tried to resolve dilemma by doing this exercise. She loves me not. Let me give you some examples on this dilemma about markets. Next slide, please. One research suggests that when large caps are about 80% of total market cap, small and mid cap does well. It happened in 2003. It happened in 2008. Reverse is also true. When small and mid caps become 35-40% of total market cap, they do badly and large cap does well. At this point of time, about 37% of total market cap is small and mid cap. As per this research, large cap should do well and small and mid cap should not do well. Next slide, please. Another research suggests that stocks are slaves of earning power. Next year, small cap earnings will grow at almost double the rate of large cap earnings. As per this research, small and mid cap should do well as their earnings growth is higher than large cap. Next slide, please. One research suggests that in the election year, government and political parties spend money and put consumption on fast track. Not only in India, but rest of the world, in most markets, during election year, markets outperform. This year, we have election year, so our election should do well, our markets should do well. There is one research which suggests that in the leap year, Indian markets haven't done well. In most leap years, Indian markets have given negative return. This year is a leap year, so market should give negative return based on this historical precedence. One research suggests that whenever foreigners come to sell, our markets either correct or consolidate. In the month of October, November, FPI sold. In the month of December, they bought. In the month of Jan, Feb, they sold. In the month of March, they bought. They are behaving like a drunkard master, sometimes buying, sometimes selling. Next slide, please. One research suggests that in many global investors' portfolio, India is actually underweight compared to our share in global GDP at 3.6%. in their portfolio, Indian equities allocation is 0.5%, 1%. This means that FPIs will be a buyer, not a seller. Next slide, please. One research suggests that whenever US starts cutting interest rate, their market falls and emerging market also corrects. This year, US is expected to cut interest rate. This year, emerging market, including India, could see correction. Another research suggests that how will correction come? Domestic mutual funds have so much of money power thanks to all of you. You give us money in SIP and then we keep on buying in the market. How will correction come with this kind of flows? Net, no one knows how markets are going to behave. In the hindsight, it is always easy to explain what happened in the market. But going forward, we have to trust Jako Rakhe Saina, Maar Sake Na Koi. India today is truly in its Amrit Kal. Of course, we'll have to do a lot of hard work to ensure that we become Viksit Bharat by our centenary. Next slide, please. Now, is there something which we should be worried about? Answer is yes. IRFC and HDFC Bank both are great companies. But IRFC today trades at twice the valuation of HDFC Bank. And this high valuation is a bit difficult to understand. BHEL and L&T are also good companies. Next slide, please. Today, BHEL trades at 7 times higher valuation than L&T. This premium trading, this premium valuation is also a bit difficult to understand. IOB and Central Bank of India are both good banks. IOB and Axis Bank both are good banks. But IOB trades at double the premium of Axis Bank. This kind of higher valuations for certain companies is beyond our understanding. We think this might be happening because of low free float. For example, IOB's 96.4% shares are held by President, who doesn't trade in market. The free float is only 3.6%. Of that, some shares are with LIC and other institutional investors. The total free float in a 1,22,000 crore market cap is probably 4,000 crore or less, which is why little bit of buying pulls stock prices higher and stocks continue to trade at much higher valuation than what probably they deserve. Our recommendation will be to be cautious in those stocks where floating stock is limited. I'm not suggesting you sell that today itself, but be aware that this high valuations are unjustifiable. What will happen to the market? Well, today market is discounting that Fed will cut interest rates 3 times or 75 basis point in CY24. It is discounting up ki bar 400 par. It is discounting that oil will remain at $75-80 a barrel. It believes consumption will recover. If all these things happen as per expectation, then market will continue to rise. If some of these things fail to happen as per the expectations of the market, then there could be correction. Next slide, please. At this point of time, our recommendation is to be neutral weight equity, keeping in mind that small cap are showing red signal. Next click, please. Mid cap is showing yellow signal and large cap is showing green signal. Overall equities market require equal allocation to equity, neither overweight nor underweight to your risk appetite. On the debt market side, US Fed is expected to cut rates. India is getting included in bond indices that should bring about $30-35 billion worth of flows in Indian debt market, pushing yields on the lower side. This is time to go for the longest possible maturity. 30-year government securities, 40-year government securities, 50-year government securities. Try to lock interest rates for as long as possible in government securities or PSU bonds, as interest rates are expected to come down over next 12 to 18 months. Next slide, please. Next slide, please. On gold, we have been bullish since March 2020 COVID era. 2021 was a washout year, but it did very well in rest of the period. We believe gold will do well as central banks now buy about 1,000 tons of gold every year. They have become like Indian housewife buying tons of gold. Gold also does well when US interest rates come down. In every cycle in the past when US interest rates have declined, gold has almost surged by 100%. This time also US interest rates are expected to come down. Will that push gold prices higher? If history is any evidence, then quite likely. Finally, what to expect in 2024? One, global growth will slow down. To support growth, central banks around the world will cut interest rates. Debt, longest duration should do well. Gold will continue to shine in 2025, like 2024 and 25, like earlier years. In equity market, large caps offer better risk-return trade-off. Domestic cyclical should outperform the market in the days to come. IT and chemical sector seems to be bottoming out and will become good investment over next 3 to 6 months. SME exchange looks very, very red zone. Low floating stack counters, as I mentioned earlier, also looks very, very red signal. With this, I will end my presentation, but happy to take your questions. Abhishek.
Thank you, sir. It was really very, very elaborative. I'll request all our customers who have joined. There is a question box, and you can also post your question because it's live on YouTube. And so we have already a list of some questions which we wanted to ask. First of all, as you started, you shared that yes, there is a lot of earnings growth expectations across, and we were discussing this before this call also. So how do you see the cash balances with the corporates, and how you see the way forward earnings, especially on the mid and small cap side, where we have seen some bit of volatility in last 15 to 20 days?
So Abhishek, what happens is that when there is a momentum, then the kachra also starts running. And we have a series of promoters who join hands with operators to distribute their shares among gullible investors. किसी जमाने में बहुत सारी एक्वाकल्चर कंपनी में ये हुआ, ग्रेनाइट कंपनी में हुआ, हैदराबाद बेस्ड बल्क ट्रक्स ऑर्गेनिक कंपनीज में हुआ, फिर टेलीकॉम कंपनी में, फिर मीडिया कंपनी में, फिर टेक्नोलॉजी कंपनी में. there is almost a predictable pattern where market rises, Kachra stocks promoter join hands with operators to distribute their shares among gullible retail investors, and then markets correct. The similar pattern is repeating now, and which is why we are seeing in last 15-20 days some stocks have corrected big time as SEBI and ED are going and hitting those operators. If you are invested in Kachra stocks, you need to be worried. But if you are invested in quality stocks, you don't have to worry. In quality stocks, you think मुझे $4 ट्रिलियन की इंडियन इकोनॉमी से $40 ट्रिलियन की इंडियन इकोनॉमी के लिए मेरे को इन्वेस्ट करना है. For Kachra stock, please get out as soon as possible.
Right, so that's a very fair advice, and in fact all the investors should understand this, that where the quality is, and they should rely on the research which is being provided by a lot of institutions, including HDFC Securities. So can you share some light on the cash balances with corporates and how it is going? Because, and secondly, as you were talking about debt market and interest rate expected to come down, which is the segment of the market where you believe a lot of savings will come because of less interest payments?
So Abhishek bhai, today we are seeing that corporate India is in a good shape. Balance sheets are strong, leverage is low, interest cover ratios are good. There are some businessmen who are taking technology and disruption as an opportunity.
Right.
So they are investing in business. There are some businesses which are worried about future. They are not investing because they don't know what will happen to their business going forward.
Right.
There is a one generation of entrepreneurs. They are not sure whether their next generation will come into business or not. So we are seeing a very mixed reaction in corporate India. Some companies are investing, some companies are not investing. But overall, India Inc. has one of the highest profit in their lifetime, one of the lowest leverage in their lifetime, and one of the highest cash balance in their lifetime. My feeling is that we will see what happened in America, where promoter families became shareholders and gave company to professionals to run. What happened with Larsen and Toubro, ICICI Bank, kind of companies where shareholders moved out and gave business to professionals will happen in many Indian companies.
Right, sir. Also, sir, now looking at the way Indian markets are shaping up, and when we see globally how things are, there is Russell 100 or China market where valuations are low. Any views on those markets, how they are shaping well, and should people look at those sectors or those part of the economies?
So Abhishek भाई, हमेशा हमारे लिए एक डायलेमा रहता है, सुंदर खरीदे, सस्ता खरीदे. भारत सुंदर मार्केट है, ऑल टाइम हाई पे ट्रेड कर रही है. For last 25-30 years, it has delivered positive return year on year.
Right.
The experience of global investors in India is good, and which is why probably we trade at premium to everyone else.
Right.
Now, there are many sasta markets also in the world. Russia trades at 1/3 of India's valuation. But you can't invest in Russia as your own government prohibits dealing with them. China trades at 1/3 valuation of India. But वहां पे सब कुछ public sector है. There is no private sector left. Brazil has a communist government and it trades at 1/2 the valuation of India. Will it go Russia way? Will it go China way? No one knows.
Right.
In all countries like South Africa, Turkey, Taiwan, South Korea, there are some challenges or others. What will global investor do? सस्ता खरीदने जाएंगे तो बहुत सारी मार्केट है, ब्राजील, चाइना, साउथ अफ्रीका, रशिया। बट अगर सुंदर चीज खरीदनी है जो आपके घर में आप 5 साल, 10 साल, 15 साल, 20 साल रख सके, तो सिर्फ भारत उनके लिए बचता है। My feeling is that we are getting valuation of gold, and it does cast responsibility on us to deliver performance of gold. But other markets are treated at the valuation of copper and bronze and pittal and nickel. Well, they deserved it. And hence, I believe foreigners will continue to put long-term money in India. They will invest, like I'm recommending people to invest for $4 trillion to $40 trillion journey, 10x growth in India. And they may put some trading money in China kind of countries.
But as you keep on meeting investors which are of globally FIs and all, do you see focus on India going up way forward, or there is a pause because there is an expected election where though a lot of people are believing incumbent will come, but still you know, there are more Indian focused fund which are waiting on the sidelines to come in.
So Abhishek भाई, दो किस्से सुनाता हूँ
जी।
एक, जब इंस्टीट्यूशनल कॉन्फ्रेंस होती है तो कई बार हमारे फ्रेंडली सेल्स पर्सन हमें फोन करते हैं कि भाई आप प्लीज आ जाना, हॉल हमें भरना है। तो कोई बड़ा उद्योगपति हो, बड़ा रेगुलेटर हो, तो रिक्वेस्ट करेंगे नीलेश भाई जरा आके बैठिए, अच्छा लगेगा। इस बार जब इंस्टीट्यूशनल कॉन्फ्रेंस हुई, लोगों ने उल्टे फोन किए कि सर आप आना ही मत, बहुत सारे क्लाइंट आए हैं विदेशी, उनके लिए जगह नहीं, आप आएंगे तो आप खड़े ही रहेंगे, तो आने की हिम्मत ही मत करो। So many global investors are visiting India today. Second, हम यूएस में एक क्लाइंट को मिलने गए थे, सॉवरेन क्लाइंट है। They had one Indian fund manager and one Chinese lady. The Indian fund manager was aware about India and was worried about expensive valuation, so never invested in India. The Chinese lady was ignorant about India and invested in India. 2-3 years down the line, their boss called and said, look, this China fund manager has done so well by investing in India. And the Indian fund manager didn't invest enough in India. So I should shift entire portfolio to China fund manager. Today, it's almost becoming a pap if you are underweight India. Arey, how come you don't know about the story of India? What are you doing?
Right.
If you lose money by overweight China, that's considered a bad thing. If you are underweight India and don't make money, that is also considered bad thing. So my feeling is that foreigners will continue to invest in India, not on a daily basis, but certainly whenever they get confidence that मुझे सुंदर चीज खरीदनी है.
Got it, sir. Got it. So now there are a lot of question on index. Before I go to sectors I just wanted to understand. Look, as a fund house, we always have some understanding about various sectors, and that's where we place our investments or customers' investments. Any sector which has underplayed below your expectation, though last year you have participated and it is not going well as per your expectation.
अभिषेक भाई, बहुत सारे सेक्टर में ऐसा हुआ. So as a process, Abhishek भाई, Kotak mutual fund is growth at reasonable price. We buy real companies, real businesses, and we try to buy them at reasonable prices. Now there are so many companies in consumption related sector which had done very well in 2020, 21, 22. But because they delivered 5-6 years return in 2-3 years time period, they had become a bit expensive. They were trading at a significant premium to PSUs and so on and so forth. Now they are kind of holding back, stagnating, and all these stocks have run away. We could have sold those shares and got into momentum stocks, but that would have been against our investment process. We have remained invested with quality companies which had become a bit expensive in the shorter term, but is still worthy of holding on a longer term basis. We didn't
Right.
invest in low floating stock counters where prices have run up to the sky high levels. We believe जो जितना ऊपर गया वही उतना नीचे गिरेगा. And we should stick to our process of staying invested in quality companies. ये एक ऐसी मार्केट है जहां गधे और घोड़े दोनों भाग रहे थे और गधे घोड़ों से बहुत ज्यादा दूर भाग गए. It is still time to bet on long-term horses, not the donkeys.
So any specific sectors where you now are, so this is about the past where you have already placed your bets and where you yet to see the kind of returns which were expected. But which all few sectors, if you can highlight, which where you are currently bullish upon?
So one sector where we are bullish upon is domestic cyclicals, auto, cement, real estate, construction. These are the sectors where we believe domestic growth will be strong. In automobile, there is waiting period, metal prices are down, and companies are launching newer and newer products. Exports as well as local sales will be ahead of expectation. In cement, real estate sector and infrastructure sector both has taken off. There is consolidation in industry with 5-6 large players. We believe cement should do well in the days to come. Real estate has come down from double digit of GDP to mid single digit. Now it has bottomed out and started going up. So real estate and construction should also do well. At the end of the day, Abhishek भाई सेक्टर से ज्यादा कीमत प्रमोटर की रहती है. गाड़ी मर्सिडीज बेंज हो, BMW हो या मारुति हो, कौन ड्राइवर चला रहा है, that is also of great importance. So
Right.
we invest with managers who have vision, execution capability, and respect for minority shareholders.
Got it, got it. In fact, sir, I'm getting a lot of questions on the YouTube where I could make out. There are some questions which are stock specific. I'm exiting. I'm not asking you that. There are some questions in terms of understanding how to analyze a stock. Well, I will request all those clients who want to know about it, you can get in touch with our team and you can take a view of research from HDFC Securities, because stock specific research, though it's been done at Kotak Securities and Kotak AMC's end, but they will not talk about it. So I'll just exclude. So now I'll shift to the industry, as in, because there's a lot of news around the stress test to be done on large, mid and small caps. So what is in for the investors? Why was this done, and what is the implication for investors?
So Abhishek, by stress test is a statistical exercise. उससे बहुत कठिन परीक्षा थी अग्नि परीक्षा मार्च 2020 कोविड में. हमारे फंड उस समय रिडम्पशन प्रेशर फेस कर रहे थे, मार्केट्स गिर रहे थे और हम लोग ऑफिस में जाके काम भी नहीं कर सकते थे. In that scenario, we repaid every single investor every day. The problem did occur for Franklin Templeton in debt fund, but rest of the mutual funds, 43 other mutual funds paid even in the debt despite Agni Pariksha. तो अग्नि परीक्षा जो पसार कर चुके हैं उसको स्ट्रेस टेस्ट से क्या स्ट्रेस होगा? We have been conducting stress tests for last so many years. This is first time we are disclosing data because our regulator SEBI wanted to provide more information to clientele. It helps in taking your team to take a right decision. But do remember, this is statistical exercise. It is on a pro rata basis. In real life, I have no doubt in my mind that I will be able to liquidate portfolio in substantially smaller number of days than what my stress test is indicating.
Got it. So something related, very similar to this is about there are news around widening of large cap basket from 100 to 150. In fact, mid cap for the and both stress tests and widening. How does it impact an investor? First on stress test and then on widening. If you can share some light.
Again, from a fund manager point of view, Abhishek bhai, it puts restriction. अगर
Right.
आप देखें in the 90s, 2000s, 2010, for 30 years, fund managers managed large cap fund in their wisdom. Some
Right.
had large cap, some had mid cap, some had small caps. In mid cap funds, many a times we had more large caps than mid caps. We were able to invest based on our view on the market. Now, SEBI has brought in a discipline so that all large cap funds can be compared in one way, all mid cap funds can be compared in one way, and people know what they are getting into. एक समय था लार्ज कैप फंड में आपको स्मॉल कैप फंड भी मिल जाता और स्मॉल कैप फंड में लार्ज कैप भी मिल जाता. ये हमने उस समय एंजॉय कर लिया 30 सालों तक. Now SEBI is saying that please be true to label. लार्ज कैप फंड है तो लार्ज कैप दीजिए, मिड कैप है तो मिड कैप दीजिए, स्मॉल कैप है तो स्मॉल कैप दीजिए. So this makes your life easier, your investors' life easier. Of course, on fund manager it is extra pressure, but SEBI has been kind enough to give us some flexibility, and hopefully we will continue to add value to our customers over a period of time.
Got it. And so, what is your view? Because since while you were showing that there's a red dot on small cap and there is an orange dot on mid cap and a green dot on large cap. So this is as per your current standing basis the valuations where these companies are. But there are a lot of investors who are continuing their SIPs or investments or staggered investments in say small and mid cap. What is your view or what is your recommendation to them? Do they pause their SIPs or they continue, or what? Because the tenure of the SIPs were long term, and that's what we always talk about. So what is your guidance to them?
SIP तो इसीलिए हम लॉन्ग टर्म की करते हैं ताकि ऊपर और नीचे दोनों में निवेश कर सके. All those people who are running their SIP in small and mid cap, please continue. There is no need to stop it. There is no need to change it. My recommendation to investor is not to look at the market and invest, but to look at yourself and invest. If in March, April, May, June 2020 COVID era, you invested in market, then you are a risk taker. Please continue your investment and tighten your seat belt because things will become choppy. If you didn't do anything in March, April, May, June 2020, then please book some profit if you are overweight equity. You are average risk taker, and there is no shame in booking some profit if you are overweight equity at this point of time. If you are overweight small and mid cap, then do book profit. Fresh money, try to invest in large cap and hybrid funds like balance fund. But if you are an investor who had actually sold during March 20, then you are very, very conservative investor. Please take lot of profit from the market and become bit underweight market. Not only neutral, but also underweight. And fresh money only invest via SIP, STP. We don't know whether markets will go up or go down. Will it rise because this is election year? Or will it fall because it is leap year and a year where interest rates are coming down? We have no idea on how markets will behave. We can control our emotions. If you are a risk taker, stay invested. If you are average risk taker, then take some profit out. If you are low risk taker, conservative, then take a lot of profit out of the market at this point of time.
Well, that's a fair, very fair bifurcation of customers and how they should approach this market basis, their risk profile. So something very similar to this is as you have said, you just touched upon multi-asset as a category. Oh, so is it fair for an investor to participate or do SIPs on a multi-asset, because people te- generally tend to do a pure fund or pure equity fund SIP, though multi-asset is it. So if you can touch a bit on that, because I have also over the call I'm getting one or two questions on multi-asset, how one should approach multi-asset.
So Abhishek bhai, if you want to fill it, shut it, forget it, then an asset allocation fund is your ideal fund. I am outsourcing my asset allocation requirement to the fund manager. If markets are cheap, they will put more money in equity. If markets are expensive, they will take money out of equity. I won't have to pay any tax because they will make all these adjustments. So if I want to outsource my asset allocation worries to the fund manager, if I want a fund which is fill it, shut it, forget it, then certainly asset allocation fund is your preference. If you want asset allocation to be done at your end through your advisor distributor, then certainly put some money in equity fund, some money in debt fund, and create your asset allocation. Generally, SIP in equity and lump sum in asset allocation will be a way to go forward.
Right, that in fact addresses one of the questions, which was like how much one should allocate to large cap, mid cap, and small cap. And I know every time when this question comes, it's basis what is the current valuation now. And as you have already shown in your slide, large cap is a green signal, and mid and small cap is currently on hold just for the moment. And so, sir, I know we are falling short of time. We have just 2 to 3 minutes more to discuss. Two questions more, sir. One is on is there something new which regulator is doing, because there's a lot of questions around regulators view about manipulation of index, and I know you will be obviously filtering some words because you are part of that side, and how the regulator is looking at market, because there's a lot of concerns which I've got around 9 questions on how on with SEBI as a name. So in fact, without going through, I just thought I'll better ask you what is there something for an investor to worry, just in a nutshell?
अभिषेक भाई, बचपन में आपने आपके माता पिता से थप्पड़ खाई है?
बिल्कुल सर, बिल्कुल।
मैंने तो खाई है
जी।
कभी टपली मार देते थे, कभी जोर से चांटा मार देते थे।
राइट।
In a family, this was earlier permitted. अगर मैं आज अपने बच्चों को ऐसे हाथ लगाऊं तो शायद मेरे को जेल में डाल दें, because now that is not permitted. Similarly, a regulator cautioning investor is something which is expectation today. It wasn't the case earlier. Now there is expectation by crores of investors that people warn them if they are doing something wrong. And what is regulator saying? That in certain parts of market there is froth, which is what I have tried to give you by way of data, that IOB and Axis Bank both are good banks, but one is trading at double the valuation. If it was high floating stock, would you think that is possible? Answer is no. So what I have given you by way of data, regulator is passing the same message without taking the name of the company. Just think of this as your parent, which were allowed in earlier days to nudge you for right behavior. Today,
Right.
that thing is not acceptable. But it has happened reverse way for regulator. Earlier, no one expected regulator to caution or warn. Now there is expectation because there's so many new investors into the market. Shouldn't they be protected by warning them what's happening in the market? Answer is absolutely yes.
Right. So I think that you write it well. Last question on valuations, and should because every from every news we are hearing that the valuations are nearing the market, nearing highs and all that, and mutual funds are still investing because of the flows which they are getting. And so will this really accumulate the kind of returns which people have got in past, and some future guidance? This is the last question before I try to summarize what you said.
Sure, Abhishek bhai. Valuations are undoubtedly on the above average level, but they are not at the highest level. इनफैक्ट अगर हम हर्षद मेहता केतन पारेख के वैल्यूएशन पे ट्रेड करें तो मार्केट यहां से डबल हो जाएगा. So do remember, markets are at high level, valuations are not. Markets are at high level, but so is profit to GDP ratio and absolute corporate profit. Valuations are above average, not at the highest level. What should you expect as a return? It's always better to moderate return expectation. पहले 1-2 का 3 मार्केट था. Large cap delivered 30%, small and mid cap 60%, micro cap 90%. कुछ समय फिर 3-2 का 1 मार्केट हो जाता है. माइक्रो कैप 3 टाइम गिरता है, लार्ज कैप 1 टाइम गिरता है. Overall, can Indian equity market deliver 2 to 4% real return above inflation? I think that will be a good run rate to have. If you take risk, you will obviously get higher return, but there is no return possible without taking risk. We are all fortunate that we are born in an era of today's time. Today our economy is about 4 trillion GDP. In next 10 years it will become 8 trillion plus. जो हमने 70, 80, 100 सालों में देखा है वो हम 10 साल में देखेंगे. That is our opportunity. Stay invested for long term. Aim for real return.
That is very well summarized, sir. And for all our investors who are listening, this just a few things which I noted down, which Nilesh sir has said. Continue investing, remain invested. Obviously, wherever you are overvalued or overexposed, just look into that, especially on the stock side, because for mutual funds, at least your fund manager is doing that job, so you don't have to really worry about it. SIPs to be continued. If somebody wants to participate in lump sum, multi-asset as a category is something one should look forward for, where the fund manager and the team will take care of balancing between large cap, mid caps, and different asset classes altogether. And lastly, though we are at the peak of the market, but yes, the valuations are good, but for the right reasons, and those right reasons sir has already explained, so I'll not touch on that. So remain invested, and thanks Nilesh sir for coming over this call, and really a pleasure of talking to you. And I was able to address some of the questions. Still there are questions coming up, but I'll keep them and try to address them. Stock specific, we'll get them addressed by our research team. Thank you, sir, and thanks all the investors for joining.
Thank you.
Thank you. Thank you, sir. Thank you. Operator, we may close the call.